and your greed in the process, okay? All right, why 50 pips, Steve? I want to go for 500 pips. Okay. You are not going to deal from the absolute bottom or the absolute top. So let's take 10 to 15 pips off of that number. The move, right? You got to include the spread and slippage that these guys do. That's the business. The bigger your contract size is, the more you'll start to see it. Let's add 5 for slippage and the spread. You got a 2-pip spread, they slip you a pip 3. It's a lot of money with a lot of standard lots on. We all know that all 3 levels are not going to appear every day on the chart. So that limits you to what's going to be available to take. So if you average level 1 and level 2 from the peak formation to the high-low day consolidation zone, you got about 70 pips available to you if you have a tight ADR for the day. You can easily grab your 50 pips out of that float and grab most of what was available for all the other traders and come out way ahead of the curve. The bottom line is this. I don't know if DJ's in here, but he wasn't seeing the pattern so clearly. But because the stop losses are so tight when you get in near the low or near the high, 7, 10, 15 pip stop losses. I don't say that in public because people think I'm nuts. Hey, Doug, nice to see you, buddy. I hope I'm not embarrassing you saying this, but he had a bad week where he had more losers than winners. But because the stops were so tight and he was taking 50 out of the market at will, he was net profitable. I want his numbers to be better, but the bottom line, while he's training and learning, he's still making money. Because he's getting in close to the numbers. Sometimes he's wrong and he hits a stop, but it's 10, 15 pips and he goes again. He can have 2 or 3 stops, and when he hits one, he gets it all back for 50 pips. It's called controlling your losses and your emotions. Hey, Zaim, if you understand what's going on and how they structure the stop-loss levels and how they hit it, you can come right back at them. I once heard, in a school somewhere, I don't want to say the name, they said if you get stopped out, to go on vacation. And they really meant it. You do not want to be on vacation with me if I just got stopped out. What fun is that going to be? What I want you to understand is that when you analyze the market conditions and you get stopped out, if you walk away and come back the same time tomorrow, you could fall right into the same conditions. If you get stopped out, anyone want to take a stab at how long you wait? 2 hours. Why? If they go vector 3 again, 3 bars takes 45 minutes. If they spike the low and go back into consolidation, that will take another hour or so to set up that structure. If they spike the low again, that's another 15 to 30 minutes. There's your 2-hour time window for re-entry. The structure must be 25 to 50 pips above or below your previous entry. If they hold the level and pass a third time, and it still is also 2 hours, and they might have snapped you out with a pin and closed below or above that structure, that is still a good entry. I'll draw it for you, don't worry. I just want you to listen. Okay? So if you take a trade right out of the London box and they vector down, it looks like the W to you, and they hit your stop, you don't walk away. That's what amateurs do. You analyze the market condition wait for the next level stop hunt and strike zone, and you strike. These guys vary the levels to keep you confused. There might be a 4-hour line laying down there. They might come out, hold the level, and then go, there's the 4-hour, bam, and go get it. That might cause you to get stopped out. Control your stop and enter on the next strike zone 25 to 50 pips below where you just were. And I'll illustrate this. I just want you to hear it. I'm trying to give you the concepts for the next couple of days. You have to listen. Don't worry about the charts. Don't worry about your indicators. Don't worry about stuff you cannot see. It's irrelevant right now. I'm trying to get you inside the head of these guys, the mind of a market maker, and understand how he handles the market. This knowledge by itself is invaluable. Don't worry about the chart stuff. We'll straighten it out, I promise. Okay? If you listen to the rules I just laid out for you and wrote them down, there's a good chance you will hit your limit every single day. Or every time you take a trade, if you wait and exercise patience. The thing that's kind of crazy is you can trade both ways against a trend and against the retail trend. So that means you have an opportunity to book profit in both sessions from both ends of the range. You can take a short off the M and a long off the W on the extremes of the range and be profitable both trades. And book yourself 75 to 100 pips consistently. 50 on the first trend move, 25 to 50 on the counter. Going against the retail traders. Market makers trade both ways every day. Why would you have fear to follow them and trade both ways? You can average 100 pips a day doing it this way. Combination of pairs, let's say you take Euro, GBP, CHF, you bag 50 in the London session on all three pairs, that's $1.50 times your contracts. Then you can take the counter in one or two pairs back to the watermark on the ideal level 3 drop setup W back to the watermark. Another 40 to 50 pips. Or until the pair comes to rest into consolidation. Understand the extremes of the zone. A sucker trades in the middle and offers up your stop loss for these guys. Learn to be selective on the extremes of the range. If you're only studying one pair, that's perfect. Sunny, I don't know if she's here. She told me she got so profitable she ain't wasting her time taking my seminars anymore. I don't know if I should be proud or insulted. She focuses on Euro USD. She took about a $500 account to $8,000+ in a few months. Focusing on only Euro USD and trading both sides of the range, understanding their behaviors, and mastering that pair. Trent, I don't know if he's here, has been chasing the pound USD for years. It was driving him crazy. When I gave him the last piece of the puzzle, he beats the crap out of the pound on a regular basis for multi-5 figures. A day. Or in a couple of days. By the way. You're probably going like, 5 figures? What is that? Not 5 figures a year, 5 figures a week, or a couple of days. Okay? That's the power of understanding what these guys do. I want you to understand that. Once you master this, you're going to have no more fear. The market's going to be easy. Okay, so now, here's what we're going to do. Let's start to break the system down, the things on the chart that you guys have been bugging me about. And let's start to break them off, put them all back, go over the boxes, the times, the averages, what you're supposed to look for, how price action is supposed to behave, the structure of an M&W. That's what we're going to cover. Okay? So let's do it. The components of a system. I don't care what system you're trading. I hope it's mine, and I hope that you throw everything else out. But you got to have a reason for entering the market. You can't just go, I like euro today, I'll take it. This has to be called your setup, right? It's got to be based on some fact. Level count, trend direction, peak formation, high, low, where you are in the cycle, V1, V2. You got to know where you are in the cycle, and you have to have a setup at the appropriate times for it to be valid. That setup is your reason to buy, sell, or stay out of the market. Simple, right? Easy. Easy stuff. In addition to it setting up, there's got to be a signal presented to you. Second leg pin. Issues on a hammer 9:30. The high or low is formed. The high of the day is formed. Second leg issues a hammer at 3:45 a.m. It's got to be a confluence of triggers. The confluence of triggers has to be all these things that I've been talking about for the first day and a half, has to come together at the right moment in time. Okay? 50 pip, Tokyo channel, Asian range, market maker spread. Call it what you like. They come out of the box. They have 3 vector candles to the high. It happens to be 25 to 50 pips above the top of the box. Market makers quickly pull back, go into consolidation. The second pass comes in, fails to take out the previous high candle, ends on a railroad track, forms out the perfect M. At 3:45 in the morning, that's a setup. The pair's been dropping for 3 days. It's at level 3. It's chopping. It's erratic behavior. I noticed the pins are to the downside. There's a spike to the low outside bar in the Asian session. Market makers come out at London at 3:30, and they spike the low, but barely miss it, the blue tracer, by a hair. They turn around and issue railroad tracks a half hour later at 4 o'clock. That's a setup. Okay, those are the things that have to come together. It's the signal and the confluences that all come together at the right time. Okay? That's what I'm talking about, putting it all together. And you will be able to do that. Okay, everybody knows this, but for some reason, this is in every book, and I happen to agree with this one. You got to have a fixed stop loss, man. You can't be like, I'll put the stop here if I feel like it later. And let me tell you right now, I've heard this before, and if you're doing this, stop immediately. Mental stops do not work. All right, let me say it again. Mental stops do not work. Because you always think it's going to come back, you always think you're right, and you'll go, a little bit more, I'll cut it, a little bit more, I'll cut it. If you're going the wrong way and they're shifting the zone away from higher level longs or lower level shorts, they ain't coming back, and you ain't getting out. The cheapest stop loss available to you is the first one in the right context of the market, and I'll show you where that goes. Right? Mental stops are for mentally retarded people. Don't do it, okay? You got to have a way to protect your profit once it's achieved. I've met people that can pick perfect M's and W's. They get cocky by Friday. They do one stupid trade and give it all back because they can't believe they're wrong. Is that on my tab? I can't help you with that. Those are the kind of behaviors that you got to deal with. You need Norm. Spend some time with him. You need to fix your mental edge of the game. I can't help you with that. That should not be on my tab. You got to deal. I'm going to show you where the stop loss goes in the right context of the market. I'm going to show you how to pick the perfect entries and where to take your profits. If you lift your stop loss, I can't help you. You got to beat this demon yourself. You got to beat it down. There's nothing wrong with being wrong for 15 or 20 pips and bagging 2 or 3 for 50. There's nothing wrong with that. You can be wrong. It's okay. It's better to be wrong quick, get it over with, and look for the next level strike zone. And I think what happens prior to this class, you're so happy that you finally think you got a decent setup that you hate to be wrong because then you got to look for another one, and you're scared to death to find another one. So you're like, oh, man, I thought this was a good setup. Let me just hang on, see if it comes back. I think that's what happens with a lot of people. But once you understand how the structure of the market is set up, You're going to be able to get in and get out both directions, both ways, all the time, anytime. You're not going to be afraid anymore. You should have a calmness come over you. Okay? You got to have a strategy to protect the profit once you got it. Swing traders, you got to move to break even when you're up 50 to 75 pips. You got to move the stop in behind the next strike zone stop hunt into the next level. We'll talk about it, okay? My favorite is a jumping stop where you manually jump the stop. I do not like a trailing stop. And the answer's simple. Why? Who provides a trailing stop on the platform for you? The dealer. That guy ain't your friend. I've met more good traders that have been trailed out by a trailing stop